What's up, everybody? Wednesday morning. Welcome to today's edition of the Daily Market Commentary. I'm your host, Chuck Fulkerson. Hope everybody had a phenomenal day yesterday as we saw a little bit of an attempted market rally. Today, we're seeing a little bit more weakness in our futures markets, though, as none of these attempted rallies are able to really gain much steam. But before we get started, I want to give everybody a real quick heads up to join us on Friday for our Oktoberfest Traders Summit. We have some really great guests that are going to be there. So if you go to tradersarmy.com/traders summit, you will get a chance to register for this. We've got a couple of really great presenters, a couple of people talking about trading different asset classes from cryptocurrency to forex to mastering the mental game and pro trader taxation. It's going to be an awesome day, so go make sure you register today, Friday, October 8th. It's going to be a full-day event, not a sales pitch, just a great opportunity to get together with some other traders. Okay, let's go ahead and dive into today's market movements. So looking first at the S&P, we did have this line here, which was our breakdown line from Sunday night. We fell into the demand area, got a decent rally off of that demand area, and now are sitting at the bottom of that level. So in reality, even though we're already down 1.1%, we are setting up for a breakdown, in my mind, below this region here. I think that we could have a clear breakdown below that area, and a lot of this movement occurred at a pretty decent time of the day. So looking at this time of day right through here, maybe a good reversal opportunity if price does poke back up into that way. Now, if I go to a smaller time frame, call it the 15-minute chart, this is actually also a very valuable level right through here. Matter of fact, the thing I like about this 4,300 is the time of day that it's formed right there at the London Open. It is a prior area of support, which could lead to a new area of resistance. And it's a really good reversal opportunity. If this level fails, you do have another demand area, like I said, supply area, up above you that could also hold. I like the 15-minute level better from a structural standpoint than I like the 1 hour level. Next, the NASDAQ. So the NASDAQ yesterday also attempted rally. It did come really close to this area of supply, this wick over wick area here, before then basing in front of the level and then popped through the zone. If you didn't see the basing before the level, was kind of hard to miss. That was a really good indication that level might fail, and fail it did. However, the area up above, we came really close to getting into this wick over wick, and unfortunately, it just did not hold. These are those wick over wick levels that we love, right? Wick over wick below a pivot high are going to be some of your best levels in a market. Unfortunately, as they say, just a bit outside, and it just didn't quite make it to the zone. So I'm going to remove it at this point because we came close to it without getting in. Looking at this on the daily chart, I want to pull the daily chart up for a minute. We are seeing that, this is a nice size downtrend. And our conversation on Sunday night was that this area looks pretty good for a pullback, but where do people really start losing their minds, right? That's about a 15% pullback into this region. People really start losing their mind at about the 20% mark, right? Now, why did I pull up the 20% mark? Well, because if I pull out a weekly chart, that would put us right here, right? At this prior area of resistance, old resistance axis, new support. So in my mind, you've really got two bigger picture areas that are important. And I'm not saying that we're going to make it all the way down to here, because all it takes is one or two good days for price to stop its drop and continue to rally higher. And who knows what's going to happen with any major macroeconomic fundamental news that are going to cause that turn. But I do want to be aware of these bigger picture areas as a chance to get back in. in the small time frame, no question, we are definitely sellers, right? We are definitely sellers, sellers, sellers on that smaller time frame. And when I move to the 1 hour chart, uh, that's where that's going to be similar to what we saw in the S&P with this area right here, and then on the even smaller time frame going to the 15-minute, it's this area right here. So as we're looking at today's trading, look for shorts as market rallies back up into areas of supply. Next, crude oil. Crude oil, we did get a breakout above those highs from the OPEC news, and their the next, I guess, opportunity for a sell or for a long would be this wick over wick area right here on the hourly chart. You have another level down below, both of which are pretty clean levels. I will say I would anticipate, we typically anticipate these speed candles getting retraced, and so there is a retracement opportunity there. We're sitting right near some multi-year highs, and I got to go way back to find these multi-year highs and where they're coming from. Let me move this to a weekly chart. I mean, we're going back all the way back to, I guess, October of 2014 to find some of these multi-year highs. And that's kind of where we're sitting right now, is at a little area of supply. That weekly level could be a turning point where the market does bounce off of that and come down. I think that your better level is actually significantly higher as you come way up here into the $90 a barrel range. And fundamentally, I don't know that we've seen a lot of drop off in demand in oil, right? How high can oil go? Well, oil's going to go until people start changing their behaviors. The market will continue to rally in oil until people start changing their behaviors based upon the price of oil. When the price of oil starts impacting day-to-day behavior, and we start to see consumption drop, that's where the oil prices will finally start to crack. My gut tells me that there's a better chance eventually, and we got unless OPEC gets involved, and OPEC does tend to get involved in these things. I think that $90 a barrel oil is, I don't want to say inevitable, but I think $90 a barrel oil is the natural area of supply that the market is looking to trade up to. It's just going to take a while to get there. I mean, on our weekly chart, we've been 1, 2, 3, 4, 5. We've been up 6 out of the last 7 weeks in oil, and not up a little bit, up a fairly large amount. So, we're looking on a smaller time frame at areas of opportunity to buy, and that's why these areas exist. And then the last one today would be gold. Looking at gold, we are fairly sideways. Not a lot has changed in gold over the last couple of days. I will say that we had this area here crop up yesterday at the end of the trading day, very end of the session, right at the end of the cash session. While that level is okay, it's not amazing. And if we trade up into there, the downside of this is really when it's formed. This is the beginning of the Globex sell-off. And so the other area that exists is this unbalanced wick over wick way up here. But that's also pretty far away from current price. I actually like this one better, primarily because it's a wick over wick below a pivot high, but also not formed at a great time of day. Neither one of those are really formed at ideal trading periods. All right, so those are our 4 major markets for the day. Take a look at those. See what your thoughts are. Leave me a comment down below. What are you doing in this, near-term downtrend? Are you changing any of your big picture habits? Leave a comment. Love to hear down below. And if you guys have any questions, as always, send us an email, support@tradersarmy.com. Till tomorrow, everybody. I'll talk to you soon. See ya. Hey, thanks for joining us. If you like what we do, please make sure you hit that subscribe button. It's the only way the computers know that you're actually alive and really care. And go to tradersarmy.com today to learn a bit more. And if you want to see some of our other videos, click here in the box.